Okay, moving on to objective number 7, use job costing at a service firm as a basis for billing clients. Many service companies actually bill based upon the cost. So you'll take your direct cost of serving the client, you'll have an indirect cost of serving the client. The direct cost will be assigned to the client job. This is almost exactly like what we're talking about, except in the example of a service company, you're not building inventories. You're just keeping track of your direct costs and your indirect costs. They're getting charged to the income statement without an inventory, without the cost of goods sold. But you're keeping track of those costs anyway, so that when you bill the client, you bill them for your costs plus the markup. So when we're billing clients, we want to add a profit markup to the total job costs. Indirect costs are all operating expenses, they're period costs. There is no inventory. And direct costs most likely include professional labor. So the example would be my accounting firm. We would track all of our costs and bill the client plus a markup. Now, that doesn't quite work in the real world. You have to have an amount that you normally bill based upon normal circumstances. And you bill the client based upon those assumed rates, that assumed amount of time. You bill based upon that. You can't just say, whatever it costs me, I've got to bill you. You have some latitude to that, especially if you have an extraordinary circumstance. But the fact of the matter is I have, most accounting firms have some turnover. So no matter, some employees are going to be faster than other employees. Some employees are going to get things done quicker. In some cases, it'll be faster. In some cases, it'll be more expensive. And you can't just modify your bill based upon what's going on in your office. So you come up with rates or hourly rates that you bill, your billable rates, and that really determines your sale. But you certainly want to then compare those billed amounts to the cost amount. So you are going to keep track of your job cost so that you can compare to what you're billing and whether or not you're making money off a specific job. Here again, you'll have your indirect costs of serving your clients, including rent, supplies, advertising, and you can allocate these general and administrative or general operating expenses to the jobs, similar to the way we allocate manufacturing overhead in a manufacturing company. We're going to do our estimates at the beginning of the year. Total indirect costs for the coming year, that's the budget process. We're going to come up with a cost allocation base, or what was referred to as a cost driver, and figure out how we're going to allocate those operating expenses to the jobs so that we know exactly what our basis is. And then we'll come up with a predetermined indirect cost allocation rate, similar to what we just did for our manufacturing companies. And we come up with the actual amount of allocation base times the rate gives us exactly how we're going to allocate towards the specific jobs. Now, once we have the direct costs and we add the indirect costs, which were allocated, we come up with our total cost for serving the client. We're going to add our markup, and that's the amount that's billed to the client. I wish it were that clean and that easy, but the reality is we're gonna track this and trace this, but we're going to really do it after the fact, because you can't just modify your bill based upon what your actual costs are. There could be a lot of variables that you're not going to pass on to the customer. But this is a good basis for you to at least determine whether or not you made money in a particular job and what assumptions you made, and maybe you need to modify those assumptions in the future when you do a similar job in the future, or when you do the same work again in the future. Okay, that ends chapter 3.